direct ano.
Direct institute and the manage.
You start directly. You start.
Okay.
Like all the best.
Good evening, all. I am CMA Hima Nair. I'm indeed honored and privileged to host the section. Welcome all to the webinar section on inventory valuation under Income Tax Act by CMA Dr. P. Ashish Thatte sir and sir in association with Core Code and Malabar chapter. So I would like to invite CMA Sherin C for the welcoming speech.
Thank you, Hima. Am I audible?
Yeah.
Yes.
Good evening, everyone. A very warm welcome to all present over here. Today, Trivandrum chapter joined with the Code Malappuram chapter of Institute of Cost Accountants of India, conducting online webinar on a very relevant topic, inventory valuation under IT Act. It's my pleasure to welcome CMA Padmanabhan sir, our dearest Papan sir. For us, he's our soul and has been a loving, supporting and energizing person in every way, and a person who opened lots of valuable opportunities for us. Welcome you, sir. I extend my hearty welcome to CMA Dr. Ashish Thatte, sir, who shall handle the session. While talking about him, we got the apt person to handle the session, as he contributed and worked a lot for our CMA fraternity, especially for inclusion of CMAs in IT Act. I'm very happy to greet you, sir, representing the Code Malappuram chapter and Trivandrum chapter. Welcome you, sir. I would like to extend a warm welcome to the Chairperson, CEP and Career Counseling Committee, CMA Hima ma'am, and all management committee members of Trivandrum chapter, Code Malappuram chapter, other chapters, and all other members who participate in this webinar. Once again, welcome all of you to this event. Thank you.
Thank you, CMA Sherin. Now, I would like to invite our beloved dear Papan sir for the inauguration section.
Thank you so much, Hima madam. In fact, Hima is our very dearest student friend in those days. Now, honorable member of the Institute of Cost Accountants of India, and that too taking care of the professional development activities of Trivandrum chapter. And I am very happy that this has been in association with the Code Malappuram chapter. Trivandrum chapter being my mother chapter, I should tell, where I also started the career as a student, and members across the southern region came to know about Trivandrum chapter with our presence, and we are very happy that Trivandrum chapter is again and again conducting a lot of good programs. And I am very happy that Sherin, a dynamic student of our institute, has come up to the level of getting the fellow membership very recently. Hearty congratulations, Sherin madam, for becoming the fellow member of the Institute of Cost Accountants of India. And none other than our own Ashish Bhai, Ashish Thatte sir for you all, Ashish Bhai for me, one of the youngest council member of the Institute of Cost Accountants of India, I should tell. And those who are watching, on behalf of Hima madam, the entire Trivandrum chapter, on behalf of Sherin madam, the entire Code Malappuram chapter, on behalf of Ashish Bhai and myself, on behalf of all the managing committee members of various chapters, being one of the former elected representative of the Institute of Cost Accountants of India, I extend on behalf of each and every one of us in the studio, I extend my happy Friendship Day. This is a fantastic day in which the two real close friends, I should tell, Code Malappuram chapter and Trivandrum chapter, has yet again joined together, and that too, the first ever program for the period 2023-27. A webinar with interactive session, rather webinar we call it, but webinar with interactive session. That too by my very dearest younger brother, Ashish Bhai. Hima madam, you can mute your mic. Mute your mic. Yes. That too my very dearest younger brother, who has been once again elected to the Council of the Institute of Cost Accountants of India, which is for almost the entire globe, 15 council members And hearty congratulations to each council member, each regional council members, and the chapter representatives wherein the election have been over for the period 23-27. Best wishes to each and every one of you. And that too on a happy friendship day. A fantastic program is organized by Trivandrum chapter. Hats off to you. I am very proud of you, Trivandrum chapter and Kozhikode Malappuram chapter. And like Ashish Bhai was telling, now more and more women are coming forward. Already women are cost accountants, whether be at home, if you can see mother, wife, daughter, or sister, or sister-in-law, mother-in-law, whatever it is, already they are cost accountants, but technically you people have qualified along with all of us. And coming to the elected representative side, I think you people can contribute very effectively and very nicely for the profession. And today's topic, many people have reached me through the social media telling that this is a fantastic program, Padmanabhan, you have done a great job for the practicing management cost accountant. But actually what I did, everything is done by the elected representatives of chapter and the elected representative in the council. I was wondering as to why Sunday was chosen and this time. Yes, I know Ashish Bhai, who is very busy in helping not only the profession, but also in other ways by writing articles in Marathi language, where it is useful for the economy, a message to the ministry, message to the utility services of various government. And many people have demanded me that please ask him to translate and so that it will be useful for us, like that in Twitter and other places the people have demanded me. And most importantly, I should tell my dearest viewers and my dearest student friends, maybe you people know Padmanabhan as being with the students and members, but here is a very good personality who doesn't come in the limelight for publicity, but then worked for the student fraternity as well as the members. And I have seen the practicing cost accountants in our council, especially people like Ashish Bhai, Neeraj Bhai, Vijayendra Sharma, Balwinder Singh, like that, practicing cost, Narajan Mishra, they always in any council meeting, whether agenda is there or not, they bring some item which is going to be useful and how the government has to naturally respect the practicing cost accountant. This we have learned and heard from them. I am very happy that a personality like my younger brother, Ashish Bhai Mera, but Ashish Thatte sir for all of us, the council member is with us. With this formally, because you people have requested me to inaugurate the first webinar of 2023-27 after the council and the regional council have been formed. I thank Sharath Nair, our honorable chairman, and the entire managing committee, Shireen C, chairperson of Kozhikode Malappuram chapter, and the entire team, and Hima madam in particular, the daughter of the profession, I should tell. So thank you very much for inviting me. I will also learn a little bit from what Ashish Bhai would like to share. And I am telling you, my dear friends, he along with the president have planned, in fact, the previous term itself, it has come, but during election period and other things were there, they had done some very good homework. The new president have come, new committees will be formed, and I am damn sure that Ashish Bhai is one person who is very much behind this, and sooner or later you will have a very clear-cut guidance also for the practicing members to follow, which Ashish Bhai will convey to you. And before the start of the program, Ashish Bhai has assured that with the permission of President and PD Directorate, he is also planning along with other practicing members like Neeraj Bhai and others to bring out exclusive session on CAAS, because you people are asking as to what happened to CAAS. CAAS almost Ashish Thatte sir has covered. So they will come with new this thing, and which will be uploaded in the institute website through YouTube. So those who miss the bus can definitely, the recording portion also can be seen. This is my assurance on behalf of Ashish Bhai. Over to you, Hima madam, thanking and wishing the very best to Shireen and team. And Hima, you can unmute your mic and continue this thing by handing it over to Ashish Bhai. Over to you, Hima. Wish you all the best, each and every one of you. Yes, Hima, you are live.
Thank you, sir. Thank you so much for your valuable words and support. And you are always an inspiration to all of us. So now I would like to request Ashish sir to honor the section, please.
Ashish
Yes,
bhai, you can
so-
share your PPT also later.
Yes, so you can make a.
No, preliminary words you can tell, and yes, I will take care of the PPT. मैं देख लूंगा, आप continue कीजिए, मैं continue.
हाँ, correct. So thank you so much to Hima madam and Shireen madam. The woman power is immense in southern part of India. That's what I have realized in last few days, that even SIRC chairmanship has been taken up by our old friend Divya Sukumaran. So I think woman power is immense in southern part of the region. Of course, this time's very special. Last 3-4 months we all were busy in the elections and everything. And the output of those elections, what I found was, in each and every region, there is one lady member who has got elected. So you
Yes,
go
yes.
to east, we have a lady member. You go to north, we have lady member. In the regional council west also we have a lady member, and south also not only a lady member got elected, but in the first year itself she has become chairman also of the western region. So
Two women leaders in southern region, Lavanya and Divya.
yes, there are two in the southern region is ahead. That's what I was coming to that point, that southern region is more powerful because they have two lady CMAs who will be representing the institute, their specific region. So I look forward that in future we will have lady representation in the council also. We had that earlier. From Western region, we had that earlier, but we never had a presidentship of any lady in all these years. So I'm looking forward that in future we'll have a lady president also of the institute, right? So thankful to both the chapters, Trivandrum chapter and Kozhikode Malappuram chapter, for giving me opportunity to put forward my views on this topic. I don't know how many people have done this session in the past on the ICDs or maybe on the inventory valuation, because we all know the history of this. So before coming to the history, let me take 2 minutes on my very good friend in earlier council. I should say earlier council now, because the new council has been formed. Last 4 years, we had very good, excellent relationship with Papan Bhai. And Papan Bhai will be missing you in this council of 23-27. I am sure that you will come back in 27, but that time I will be going out, because the rules doesn't permit me to come back again, whether I become president, not president. That's all different cases altogether. So my Papan Bhai is always there. I have become a little bit nostalgic, because I remember our old series of cost accounting standards, which we did very, I mean to say, exhaustively, and right from, I think, September 21 we started, and we did it up to March 22, if I'm not mistaken. So almost 6 months, almost every Saturday we did that. And I did it from so many cities, right from starting from Chennai to Calcutta to Delhi to Mahabaleshwar to Pune, and don't know, even Lucknow also. Last session I did so many cities I did that session on cost accounting standard, exactly Saturday at 11 a.m. So in fact, on my anniversary day, 19th of February, also I was doing a session from Mahabaleshwar, the very beautiful background of Mahabaleshwar behind me. So I became very nostalgic when I saw Papan Bhai on this webinar. So thank you, Papan Bhai, for all the support and our friendship, which keeps on growing in future also. So now coming back to the topic, that's not the friendship of Ashish Thatte and Papan Bhai, which is there in the council 1923, but that was not at all a friendship of IT Act and cost accountants for years together. The IT Act and cost accountants were not Papan Bhai and Ashish Thatte like 1923. They were totally opposite to each other, IT Act and cost accountants. But thankful to Vijender Bhai, our president during that time, 22-23, who gave me opportunity to meet the ministers couple of times, rather 4 times, 3 times I met our MOS Finance, Dr. Bhagwat Karad. So we are very thankful to Dr. Bhagwat Karad, who has given time to us. I met him twice on one-to-one basis, and once with Neeraj Bhai, I had gone and met him in his Delhi residence.
Correct.
And he gave us time, and he heard that what cost accountants can do, what people can we, the community of cost accountants, can help professionals, the businesses and everything, and of course, income tax also. And he had assured me in a couple of meetings that there will be something for you. He never told me that what will be there. I mean, we were pressing for the accountant definition. We all know we are pressing since last so many years. I couldn't get through that since I was chairman of direct tax committee during that 22-23 time. So we pressed for that accountant definition. He told categorically that it is not possible. You forget it, that you will get it accountant definition as such. But then, definitely he said that something you will get it. So what we got was section 142(2)(a), wherein we got inventory valuation. And of course, one very important thing which has happened in the Finance Act 23 is that inclusion of cost accountants exclusivity under the Income Tax Act. Please remember that all these years, cost accountant had very few areas of exclusivity. Here we have got the area of exclusivity, which says that cost accountants can do inventory valuation exclusively, and no other professionals are sharing this area. There are many areas in Income Tax Act which has been exclusivity to the other professionals, or we share with those professionals. There are many areas which are there. But here in this case, we have a lot of exclusivity of the inventory valuation. And of course, income tax, that is department, has also come up with earlier in 2018 only they had come up with ICDs, income computation and disclosure requirement, has been come up with those kind of requirements earlier. So they wanted this to implement effectively. And that is how now the inclusion of cost accountants has been done under section 142(2)(a). Of course, this inventory valuation is only in the cases where the assessing officer has any doubts, or while doing the assessment, if he thinks that this needs to be corrected or this needs to be done something different, or etc., then only the inventory valuation cases will come up. Otherwise, it will not. But again, I'm telling you, this is the beginning of something which is big, is going to come up to the cost accountants, and that is nothing but the inventory valuation, which may come up in the near future. So we have to remember that this March, the upcoming February 24, we will have only statement of account. We won't have the full-fledged budget. So the statement of account will be presented. So I'm not expecting anything in the statement of account, that is February 2024. But of course, once the new government is formed, whoever forms the government, but the new government, once the new government is formed, new government will present their budget in the month of say July or June 2024. And after that, there will be 4 continuous budgets, which are full-fledged budgets, which will come up. So according to me, we will have something in June, July 2024. Also, we can expect something, provided that since now we have also finished our elections, we are also back, say 1st of August to up to February. This time has been given to us for so many months which are there. If we make some kind of presentation to the government, if we sensitize the government that cost accountants can do good work in the inventory valuation, definitely they will be impressed and something may come up to the cost accountants. Of course, Institute is very much on the task. Institute has already submitted some of the submissions to the Income Tax Act. We are expecting very soon, we are expecting some rules or some kind of procedures, etc. Under this section, which are likely to come, because there are empanelment of cost accountants which are going to happen under this section for the inventory valuation on various commissionerates across the country. So there will be some rules which are likely to come up. Of course, this will come in a month or 2 months time. And if you ask me, the perfect time to come up this kind of rules is the 15th of August. So we are expecting some rules to come up by 15th of August, so that those kind of rules, those kind of I mean to say, we can follow those rules and ensure that we are getting empaneled with the Chief Commissioner, Principal Chief Commissioner, etc. So with this background, let me go through the PPT now. I hope my PPT is been seen by all of you, and it is
Yes,
moving
yes,
also. Can
yes.
you see it is moving? Can you
Yes,
see it is moving?
moving,
Moving
background.
also, yes. Okay, okay, correct. So as what we have seen, section 142(2)A is today's topic which we are going to take up. So there is little bit of the background to that. In Finance Act 2023 prescribed the following substitution of section 142(2)A. So section 142 is for one section. Section 142(2)A is into two parts. One is related to the accounts, that is recasting of the accounts of the assessee which are under assessment, and if the assessing officer or commissioner, principal commissioner, those cadre has any doubts on the accounts prepared by the assessee. So again, I'm telling you, this assessee is not just a body corporate, not just a company. Sorry, not just a company. It can be any other body corporate. So it can be a company, it can be LLP, it can be a partnership, it can be an individual, it can be any other form which is a trust and society, etc. So if they are falling under Income Tax Act, that much of ambit, that much of that much of scope has been given to the cost accountants, that if there are two portions of this section which says that you can have the I mean to say you can have one accounts if the accounts are not done properly, then these cadre, principal commissioner, commissioner, etc., they have the powers to recast their accounts. And this recasting of accounts has been given to a specific professional chartered accountants, whereas within while doing that recasting of the accounts, or maybe without doing recasting of the accounts, only in relation to the inventory, if principal commissioner, commissioner, etc., that cadre has any doubts on the valuation of the inventory, then that portion has been given to the cost accountants exclusively. It is expected that ICDs, which has been issued by the Income Tax Department in 2018, we are supposed to follow those ICDs while doing the inventory valuation. So let me go through slide by slide on this. So what I will do is I'll be reading a little bit of the slide and then we'll be explaining it to you what is being written in the slide, or what is the expectation of the government, or what is the expectation from cost accountants by the various stakeholders to be done in this. Correct. So as what we have seen, section 142(2)A has been substituted. So at any stage of the proceedings before him, the assessing officer, AO, having regard to the nature and complexity of the accounts, volume of the accounts, doubts about the correctness of the accounts, multiplicity of the transactions in the accounts, or specialized nature of business activity of the assessee, and the interest of the revenue, is of the opinion. So with all these things, he can't just give a reason that I want to do a inventory valuation or I want to recast your accounts. No, there has to be a something or the other reason. So those reasons has also been given there. So it says nature and complexity of the accounts, volume, doubts about the correctness, multiplicity of transactions, etc., or specialized nature of the business activity of the assessee, and in the interest of the revenue, is of the opinion it is necessary to do so, he may, with the previous approval of the principal chief commissioner or the chief commissioner or the principal commissioner or the commissioner, direct the assessees to get either or both of the following, namely. Correct. So he has some reason. Then when he has the reason, he will have to take the previous approval of a cadre, that is principal chief commissioner, principal commissioner or commissioner, direct the assessee to get either both of the following, namely. So what are those both things? I have explained to you earlier. We'll get those things again. So first one amongst that, to get the accounts audited by an accountant as defined in the explanation in below subsection 2 of the section 288, nominated by the principal chief commissioner or principal commissioner or commissioner in this behalf, and to furnish report of such audit in the prescribed form duly signed and verified by such accountant and setting forth such principle as may be prescribed and such other particulars as the assessing officer may require. Correct. So this is one portion, and which says that which says that furnish a report of the audit in a prescribed form duly signed and verified by such accountant, right? So what is that? That we will come to know later on. So before we go to the next slide, firstly, I would also like to thank my friend, our institute's, I think he's a joint director in the technical department, Tarun Kumarji, who has helped me in preparing this slides. So with this, we'll go to the next slide. That is to get the inventory value. So first portion is of the accounts, whereas the second portion is to get the inventory valued by a cost accountant nominated by principal chief commissioner, principal commissioner or commissioner on this behalf, and to furnish a report of such inventory valuation in the prescribed form duly signed and verified by such cost accountant and setting forth such particulars as may be prescribed. Now this word is very, very critical, which says that as may be prescribed. So that prescription is yet to come. We are waiting for that prescription to come. Of course, what will come in that prescription, we do not know. Whether it will be exhaustive, whether it will be only legal, whether it will be one sentence, 2 lines, or whatever it is, whether there will be separate audit report, 10 pages, 20 pages. We don't know what will come in that. So we are waiting for the rules which are to be formed under section, this specific 142(2)(a). As what I told you, that might I'm expecting that anytime before 15th of August now, because it's already too late, as may be prescribed and such other particulars as the assessing officer may require. So it is not just inventory valuation, but other particulars. So that other particulars, I'm expecting something good about not only just, that this inventory valuation is divided into various portions, like what is WIP valuation, what is RM valuation, what is FG valuation, how you have calculated, what is the valuation in the earlier report submitted, or what is the new valuation, what is the difference, what are the reasons, your observation, and so many things. So I mean, it is not just only the valuation, but any other such particulars as the assessing officer may require. Correct? So it is expected to come that before 15th of August. Of course, this is my wish and is only expectation. It might come out another 2 months also. I do not know. Right. So next is provided that the assessing officer shall not direct the assessee to get the accounts so audited or inventory so valued unless the assessee has been given a reasonable opportunity of being heard. So the point which I want to make it here, and the law also want to make it clear, that unless and until you give the reasonable opportunity to the assessee to ensure that he gives you a specific, given some kind of a reason that why his inventory is overvalued or undervalued, as the case may be, or he might come up with his own valuation stating that this is my valuation and this is what is this supporting for my valuation, which I have made it as a valuation. So having done this, there will be a reasonable opportunity. Correct. So what it says, categorically given a reasonable opportunity of being heard. So first, it is in the hands of the assessing officer. Assessing officer, of course, it's a routine procedure. It is not in the hands of assessing officer also. It's a routine procedure. They have given him yet another option now that, you give us the inventory valuation on the basis of inventory valuation also. There can be a lot of, this is going to be a very interesting area in future, that how businesses do value their inventories, what are all principles of valuing their inventories, and with those principles under which they are valuing their inventories, whether these principles are in line with the ICDs or with the standards or whatever it is, and so many complications which are there, that we will come to know only when those cases are coming up. But what we all know as a businesses, there are many complaints in the past also about how the inventory is being valued. So of course, it is not a routine feature. Again, I'm telling you, it is only in the case of AO is of that opinion, that earlier what we have seen those 3, 4, 5, 7 cases, that if the AO is of that opinion, then only he will go for that kind of inventory valuation, and that too after giving reasonable opportunity of being heard to the reasonable opportunity of being heard to the assessee. So only after that he can get the inventory valued by a cost accountant. So it is not just if he thinks that this is to be done and this is to be done, then let's get it done. No, nothing like that. A reasonable opportunity of being heard is also to be given to the assessee. This assessee can be anybody, as what we discussed. It can be from individual to a company, anything it is possible, right? So after subsection 4, the following explanation has been inserted, namely, just hold on. Yeah. For the purposes of this section, cost accountant means cost accountant as defined in the clause B subsection 1 section 2 of the CWA Act and who holds the valid certificate under subsection 1 section 6 of the said Act. So this is how the cost accountant is also defined. Of course, this responsibility has not been given to any cost accountant who is in employment, but this responsibility has been given to a cost accountant in practice. Correct. So cost accountant means any person, cost account defined in the clause B subsection 1 section 2 and who holds the valid COP, right? So that means this opportunity has been given only to the COP holders. Correct. So the point I wanted to make here is, we have our standards of doing the inventory valuation. I mean, we do it especially in case of cash flow valuation. We used to do it earlier for GST. We used to do it earlier for excise. Now also we do it for GST. In many cases we do it. So the point which I want to drive for you to as what it is been stated today, that there is a specific standard which has been issued by the Income Tax Department. Let's understand this standard has been issued by the department, by the government. This standard is not been issued by any institute, neither a chartered accountant institute, company secretary institute, or a costing institute. This has been issued by the government income tax department. So there are various ICDs which has been issued by the income tax department, I should say, and we are supposed to follow their standards. Correct. So we are going to certify theirs as per their standards. There can be anomalies. There can be very, very minute differences between what we do in the costing and what is being expected to be done in ICDs 2, very categorically valuation of inventories. Then after a few years, maybe 1 year or 2 years, we'll go through this ICDs and costing standards also, or costing methodologies also. And if there is any difference between costing methodologies and the ICDs 2, then we will request this government income tax department to make those changes in the ICDs 2 also. At presently, as far as my understanding goes, there are few extra points in ICDs which we don't cover in the costing standards because we are more focused only on the manufacturing. Of course, there are quite a few numbers which are there, which are not covered in the ICDs, which are covered elsewhere, AS2 or the CAS 4 or somewhere else as such. But these are very small and minute things, which of course, businesses are shrewd enough, laws are shrewd enough to take advantages of anomalies between these two standards or etc. etc. So that those needs to be plugged very quickly. And of course, we'll go back to the income tax department and we'll tell them that this needs to be plugged very quickly. So for example, I'll tell you a simple example with that. What about the valuation of services? Correct. So there can be some kind of valuation of services which may be required. That is not inventory actually, but there can be the valuation of service. Or in case of service industries, what will you do if there are any services which needs to be valued? So these things are so very minute. These things are very small, but this kind of things needs to be plugged up very soon. So let us see how we take it up. So our today's discussion, that is inventory valuation and Income Tax Act, is very much related to the ICDs, that is income computation and disclosure standards, which is category number 2 has been given for the valuation of inventories, which is applicable since 2018. These provisions will be conducted in line with the relevant ICDs as issued by the government. So we have to follow this ICDs 2, which is there. We can't have our own standards. I mean, we have our own standards, and that is very much in line with the ICDs only. In fact, again, I'm telling you, there are 2-3 points which has been extra put up in ICDs, which we don't consider as such in our costing standard because of we don't deal with retail, we don't deal with interest on inventories, etc., etc. So those has been also dealt in the ICDs. So let's go to the ICDs one by one. So what ICDS 2 says, the ICDS 2 shall be applicable for the valuation of inventories, except so because inventories are there in many nature. Inventory is a word which is being used in the general parlance, which has been used at various different parlances, also different other meanings also. So what is the meaning of inventory as such, that needs to be understood over there. So that's why ICDS 2 shall be applicable to the valuation of inventories, except so there are few exceptions which has been given. So first one under that is work in progress arising under construction contract, including directly related service contract, which is dealt by the income ICDS on the construction contract. So there is a special construction contract ICDS which is there, which will be dealt in that, because I know construction industry, when they construct a flat, a building, say a building of 100 flats, they call it in general parlance that this is our inventory. Correct. So of course it is a general parlance, it's not specifically as an inventory. So of course there is a separate ICDS also for that construction contract asset. So it will be done through that ICDS asset. So ICDS 2 is not applicable to work in progress under construction contract. Next is work in progress, which is dealt by the other ICDS. So there are other ICDS wherein work in progress, which has been dealt, I think 7 or something like that, which is there, which has been done through the ICDS. So that can be done under that work in progress. Then we have shares, debentures, and other financial instrument held as a stock in trade, which are dealt with by the ICDS on the securities, which is separate ICDS, which is there. So they also call these shares and debentures which are held as a stock in trade as an inventory, because that is stock in trade, in other words. So companies buy those shares and debentures on 31st of March, it remains as into the stock for the companies, and they have been purchased specifically as a stock in trade. They have not been acquisition. They are not your own shares or or other financial instruments which are there. So it is been told as it is very much as a stock in trade, but that is covered separately by separate ICDS. So it is not covered under ICDS 2. Then next is the producers inventories of livestock. It has been there. So we have been doing this for a long period, that livestock, agriculture, forest product, mineral oils, ores, gases, to the extent they are measured in the net realizable value. So they are also not been covered over here because they are depleting or reducing kind of inventories which are there. So their valuation, which goes with the different principles and not by the principles which has been covered in the ICDS. So producer inventories of livestock, agriculture, forest product, mineral oils, ores and gases, to the extent that they are measured at the NRV, net realizable value. Of course, that is a separate chapter altogether. That is a separate valuation altogether. So it is not been considered in the ICDS 2. Then next one is machinery parts, which can be used only in connection with the tangible fixed assets, and their use is expected to be irregular, shall be dealt with accordance with the ICDS on the tangible fixed assets. So in case if that kind of a valuation needs to be done of the tangible of the machinery spare parts, so that should be done on the basis of the separate ICDS on the tangible fixed assets, not on under the ICDS 2. So in all, if you see, generally speaking, whatever has been manufactured by the manufacturing unit, which has been kept under as an inventory on a end of the financial year, say 31st of March. So only that much will be considered as inventories. Of course, it's a huge scope for the cost accountants. If any AO who wants to go into those inventory and check what kind of inventory has been held, what is the valuation of that inventory. If he has even single doubt, he has been empowered to go through the valuation of this inventory for the purposes of the under section 142 when he is doing the assessment of that specific business entity. Correct. So what ICDS 2 talks about is the various definitions. So inventories, which are assets which are held in the sale or the ordinary course of the business in the process of production for such sale, in form of material or supplies to be consumed in the production process or in the rendering of the services. So the point is, they have defined certain things in the inventories as such. What is the inventory in general? Of course, exceptions has been given, but then There are inventories. What is the inventory that has also been given in the ICDs, which are, they should be held for the sale in the ordinary course of the business, correct? So held for sale in the ordinary course of business. I always tell people that, I'm a manufacturer of some those fire extinguisher, right? So as a company, I have a very huge company spread it into 2 acres, 5 acres, or whatever big and I have put thousands of fire extinguishers with me, but that's not the held for the sale in the ordinary course of the business. That has been just kept as a fire extinguisher over there, and it's a total separate different inventory which is there, correct? So it is not a machine part, it is not a shares, debenture, etc., but it is an inventory. It is going to form part of some asset or whatever it is, but that is not been held in the sale of the ordinary course of business. Whereas this fire extinguisher has been manufactured by some company, and they must have kept some fire extinguisher at their end because they are manufacturer of that fire extinguisher company. So if they have kept those thousands of fire extinguishers on in their warehouse on 31st of March, then that is the inventory which they have kept. So that is very much falling under the inventory definition of ICDs 2, right? So we have to understand the difference. What is the usage? So held for the sale in the ordinary course of business, in the process of production of such sale, or in the form of material or supplies to be consumed in the production process or in the rendering of the services. So this is how the inventories are to be calculated. Inventory are to be considered as such as a part of it. The next definition is net realizable value is the estimated selling price in the ordinary course of business less the estimated cost of completion and the estimated costs necessary to make the sale. So net realizable value is whatever is the realizable value of that inventory which might fetch in future. So it is estimated selling price in the ordinary course of the business, right? It is in the ordinary course of the business less the estimated cost of completion. So if there are any specific commission is to be charged or something of that sort, then what is the percentage of that commission or estimated cost necessary to make the sale? So we know that in ordinary course of business, I have to pay 5% commission to the dealers or to the wholesalers or super sellers or whatever name you call it. So if the machinery, if the inventory is worth 100 rupees, the sell MRP is written as 100 rupees, but I know that 5% has to be given to retailer, 10% has been given to the wholesaler. So of course I reduce 15% out of that, then my net realizable value comes out to be 85 rupees and not 100 rupees, right? So this is what is the net realizable value is. The words and expression used and not defined in this ICDs, but defined in the Act shall have the meaning assigned to them in that Act. Of course, it's a standard wordings which has been put up. So if wherever there is a specific meaning of the word which is not given in the ICDs, but elsewhere in the Act, then the Act prevails, of course, whatever is the meaning. So there is specific para for the measurement also. So inventory shall be valued at cost or the NRV, whichever is lower. Then ICDs to talk about the next portion which talks about there are I think 27 or 25 paras which are there in the ICDs 2. So you can go through each and every para. So this is nothing but the PPT of those paras which has been created. So ICDs 2 next para is of the cost of inventories. The cost of inventories shall comprise of all the cost of purchase, all the cost of services, cost of conversion and other costs incurred in bringing the inventories to their present location and the condition. So what is expected is if I'm manufacturing certain goods and keeping it into the warehouse, then those costs from manufacturing location to the warehouse location is also to be considered in bringing those inventories into their present location and condition. So that is also quite important. So it is not just cost of purchase, service or conversion, but all other costs which are incurred in bringing the inventories to their present location and the conditions, right? So let's see one by one what is that. So cost of purchase. The cost of purchase shall consist of purchase price, including duties and taxes, freight inward, and other expenditure directly attributable to the acquisition. Trade discount, rebate, and other similar items shall be deducted in determining the cost of purchase, right? So now what is the difference between CS4 and the ICDS2, which I can see apparently is the cost of purchase shall consist of purchase price, including duties and taxes. So here they want you to have the purchase price, which is including of the duties and taxes, whereas we don't consider it as including duties and taxes, but we say that which are convertible, which are creditable, which to whom you can take the credit. So that cannot be considered as a cost. It's a big chunk. So of course, there are provisions in the ICDs also, which excludes these duties and taxes over there. But however, currently they have categorically stated that the cost of purchase, that is purchase price, including duties and taxes. So this we will clarify with the income tax department. They are also working on that, what is to be done in this case. So these are apparent differences between the costing principles and whatever has been given in the ICDs. So let's see how far it takes up. So currently it is duties and inclusive of duties and taxes. Then the freight inward and other expenditure directly attributable to the acquisition, trade discount, rebate and other similar items shall be deducted in determining the cost of purchases. Correct. Many of you must be asking me a question what to do with the duties and taxes. Of course, as a costing principle, as a cost accountant, a cost which can be taken up as a credit, which is convertible, which you can claim as a credit from other things as such. So those costs needs to be excluded because that's not part of the cost. We say cost is always indifferent of the taxes. So I will consider only purchase price and not other duties and taxes. Of course, we'll follow costing principles, right? So that is the cost of purchase. Next is the cost of services. The cost of services shall consist of labor and other cost of personnel directly engaged in providing the services, including supervisory personnel and attributable overhead. So in case of any inventory which is inclusive of some cost of services which is there, then what is that cost of services needs to be calculated. The cost of services, it says that labor and other cost of personnel directly engaged in providing the services, including supervisory personnel and attributable overhead. So that also needs to be added as a cost of services. Next is, of course, cost of conversion, because we are more experts to know how to calculate the cost of conversion. We know how to extract data and find it out how much is the cost of conversion, especially in case of WIP and FG. Raw material cost, not much of the issues, but in case of FG and WIP, where after some processes this cost has to be derived in case of inventories, then it is quite important that we should accurately calculate the cost of conversion. So what is all cost of conversion inclusion which has been given? So first one amongst that is the cost directly related to the units of production. So it is something which is costs which are directly related. We all know how the cost directly related to the units of production. Then systematic allocation of fixed and variable production overheads that are incurred in converting materials into the finished goods. This is very critical point, because next E point, when it will come, you'll realize the importance of fixed and variable production overhead. So what ICDS expects you to do is to differentiate between fixed and variable production overheads. That is first thing which we must understand. As per my professional judgment, whatever is the fixed, I need to identify, whatever is variable, I need to identify, and systematic allocation of those overheads needs to be put up as a conversion cost. Correct. So what is the importance of these two segregation? We'll see in point E. Then we have fixed production overheads, variable production overheads. So cost of conversion includes this fixed production overheads and the variable production overheads. So if you see the difference between B, C and D, it says B is a systematic allocation of fixed and variable production overhead. So whenever there is a common pool of expenses, I need to have the systematic allocation, whereas the directly attributable fixed production overheads and the variable production overheads are going to form the part of the conversion, total conversion cost of that inventory. Plus the E point, the allocation of fixed overheads based on the normal capacity of the production. Correct. So this is where very critical portion of the cost accountants comes into the picture. When I saw ICDS, of course, before this change happened in the Income Tax Act, we had gone through ICDS earlier also. And at that point in time, I was very happy to see that income tax department is considering the basic costing principles of allocating fixed overheads on the basis of normal capacity, right? So in case of CAS 2, if you refer to the CAS 2, which talks about the capacity utilization, which is on the capacity, so that will tell you how the normal capacity is to be calculated. So the reference of normal capacity you can always take from the CAS 2. We have done a lot of work in the CAS 2. I myself have worked many a times on the CAS 2 when I was part of cost accounting standard board in the year 15 to 19. Those years, I think 1 year 17, 18, 18, and 2 years I was associated with the CASB, and we have worked a lot. We have done a lot of efforts to change that standard of capacity and to evaluate what is normal capacity, etc., etc. So those guidelines has also been given in the capacity utilization CAS 2 capacity. So kindly go through that. And I'm happy that they are considering, income tax department is also considering how the allocation of fixed production overheads can be done on the basis of normal capacity. So that is allocation of fixed production overheads. Then unallocated overheads to be recognized as an expense in the period in which they are incurred. So see, this is what is the difference between cost accounting principles as well as the taxation principles, because when I have to calculate what is the costing profit, I will not use this unallocated overheads as a part of the costing mechanism, but in case of cost audit report or annexure to cost audit report, I will shift those expenses to para D2, which is reconciliation between financial profit and costing profit to the extent of this unallocated overheads. But income tax is different. Income tax wherein they need to calculate how much is the tax on the profit, and hence they, because we are not calculating a costing profit, we are calculating the financial profit only. So only in the case of inventory valuation, this allocation should go to the inventory valuation, whereas the other unallocated portion is expected to be the part of the profit and loss account only. It cannot be a part of the reconciliation because we are not doing costing profit. We are not calculating costing profit. We are calculating financial profit only. So when I am recasting the accounts, especially in case of 142(2)(a), it is expected that certain portion will go to the inventory as on the basis of normal capacity, whereas the portion which has not gone to the inventory on the basis of normal capacity will be charged to the profit and loss account, because that is financial profit and loss account, that is not costing profit and loss account, right? So these are all things which are to be considered as a part of the conversion. So right from the beginning, we have seen the directly related costs, systematic allocation, fixed, variable, allocation of fixed fixed production overheads, and then unallocated overheads to go to the financial accounts or the financial profits and against those financial profit also. Of course, other than that, they have given certain cost of conversion. So basic principles of joint cost, byproduct, and other cost are also to be considered as a part of cost of conversion. We know the principles of joint products. We know the principles of byproducts. We have separate cost accounting standards on joint products and byproducts. So we can go through that and understand that how the costs are allocated to the joint products, how the costs are allocated to the byproducts, and what is the valuation in case of after allocation of those costs to the various products. So joint products, byproducts, and other costs, and finally interest and other borrowing cost also. So cost of conversion includes interest and other borrowing costs, but only to a specific extent. What is that? We will come to know later. So this is something which is a different portion than what we are calculating in the costing principles as such, that interest and borrowing costs are not part of the inventory valuation. That is, while calculating the cost of production, if you see the format of para B2, that is cost sheet or average cost statement, we are considering the cost of interest and borrowing cost as a part of finance cost, which is there in the cost of sales, and of course not in the cost of production. So what to do with this interest and borrowing cost? Because we value inventory on the basis of cost of production and not on the basis of cost of sales. So what to do with this interest and borrowing cost, you will get the answers very soon. Correct. So here is a little bit of the, of course, thanks to the Taxman Publications, who has given their some write-up on the ICDs too. So it has been taken from that. So inventory cost is inclusive of purchase cost, other cost, and conversion cost. So purchase cost includes import duties. That is important. They have given categorically as import duties. Then we have conversion cost, that is factory overheads, direct labor, and joint costs. So joint costs are divided into further joint products and byproducts. So what is joint products? Is sale value at the separation, sale value after the separation. So this has been taken from the basic principles of costing or cost accounting standard, whatever you say. And if there are any byproducts, then the net realizable value deducted from the joint cost to understand what is the value of those byproducts as such. And then in case of factory overheads, they are fixed and variable. And in case of fixed, on the basis of actual production, they needs to be charged, and on the basis of normal capacity, they needs to be charged. And in case of variable overheads, at the normal capacity or whatever is the capacity, variable overheads are 100% charged to the that inventory valuation onto the cost of production. So when actual production is almost equal or lower than the normal capacity, what is almost equal or lower than the normal capacity, that all there are specific principles which we have given in CAS 2, so that needs to be followed. And when the actual production is higher than the normal capacity, so there are certain cases wherein it will come up that what to do in those cases. So of course, that is in case of fixed overheads absorption. This is specifically in case of fixed overhead absorption. So this is in nutshell what is there in the valuation of the inventories. Correct. So going ahead, there are certain exclusions from the cost of inventory. So there are few things which has been given. So again, there will be a conflict between the cost accounting standards, and there is expected to be a conflict between ICDs. So what is that, we will come to know. So in determining the cost of inventories, following costs shall be excluded and recognized as expense for the period in which they are incurred. See, income tax department is more interested in knowing, of course, what is the cost of what is the value of this inventory on the basis of cost or net realizable value, whatever it is. They are equally interested to know what is the financial profit, because ultimately their taxes, the taxes which business entities pay, are on the basis of the profit which they have earned, on the financial profit which they have earned. So that is something which is very important to understand. For them, it is from the one bucket you send it to the other bucket. In case of costing profit, that we don't take it in that other bucket. So we say that it's a part of the reconciliation. We don't consider at all as a part of other bucket, because we have to find it out how much, what is the costing profit. So one bucket is of the inventory, one bucket is of the financial profit, and the third one, what we see, is the reconciliation. So from, if nothing is happening in the COP, if the fixed cost needs to be removed from the first bucket of the inventory, we don't send it to the second bucket. We directly send it to the third bucket, saying that it is a reconciliation item. That's not falling anywhere in the costing methodologies as such. So we calculate the costing profit on the basis of removing that fixed cost from there. So similarly, those abnormal amounts of wasted material, labor, and other production overheads. Correct. So when these are not to be considered as a part of the inventories, that needs to go to the second bucket. That will not go to any third bucket. So it will remain in the second bucket. So while calculating the profit, the benefit of the same will be given to the assessee, that is business entity, and ensure that profit is calculated after doing so. They could have actually, I don't know how on the larger context, I'll tell you, just to leave this PPT, I mean to just deviate from this topic. I mean to say, what I mean to say is today the taxes are charged on the financial profits. So whatever are the profits which has been earned, they have their own methodologies to calculate those profits. So that is absolutely all right. However, I will not be surprised, or the income tax department should seriously think in future that why are they charging profits? Why are they charging taxes on financial profits? They should think of they should think of charging taxes, or they should think of putting the taxes on costing profit. Why only on the financial profit, or whichever is higher, they should go for that kind of a valuation in future, because this kind of inventory valuation or these principles of inventory valuation are going to make a lot of changes. I don't know when this ICDs 2 is followed on letter and spirit basis. By the normal assesses, these are the cases where we are looking, that is after the assessment, when the assessment is going on. But in the normal cases also, entities are supposed to follow ICDs 2. So how they are going to take up in that case, I do not know. So the first portion, the exclusions from the cost of inventory, the normal amounts of wasted material, labor and other production overheads. So what it says, shall be excluded and recognized as an expense. So from removing from one bucket and sending it to the second bucket, not to the third bucket as what we saw. Storage cost, unless those costs are necessary in the production process prior to a further production stage. So if there are storage costs, unless those costs are necessary in the production process prior to a further production stage, so it will not be forming the part of the inventory, it will form the part of it. But just hold on. Yes, sorry. So those storage costs, of course, that will not form the part of the inventory, but that will form the part of the second bucket, that is while calculating the total profit. Then admin overheads that do not contribute to bringing the inventories to their present location and condition. So this is very critical here also. I will say in a different way to look at that. So, our cost sheet, if you see the format of our old cost sheet, we used to call it as Caspur also. We used to call it as, administrative overheads of the factory. So admin overheads related to the factory, that row number we used to call it as a 12A. That is admin overheads related to the factory, and that we used to charge it to the inventory valuation. So similar principle has been picked up in the ICDs 2. So you see very carefully what they have stated. Admin overheads that do not contribute to bringing the inventories to their present location and condition. Correct. So they want to find it out which are administrative overheads which contribute to bring the inventories to their present location, and admin overheads which do not contribute to bring the inventories to their present location and condition. So these are the two admin overheads they want to identify, and admin overheads who do not contribute, that need not be the part of, that should not be the part of inventory valuation, but that will go into the second bucket, that is the total financial profit calculation. Whereas admin overheads which are to contribute to bringing the inventories to their present location will be charged to the inventory. So that is what is the I liked it about ICDs, that they have thought to that extent, that is admin overheads related to the factory admin overheads also considered as a part of to be charged as a COP, cost of production, and not as a cost of sales. Next, further D portion is the selling cost. We all know that selling costs are part of cost of sales and not as a cost of production. So these are to be excluded from the inventories. Correct. So in the different word, just a presentation format. So abnormal wastage, storage cost, admin overheads, and selling and distribution overheads, which are to be excluded, would be excluded. Correct. Then the cost formula. What is the cost formula which has been given? The cost of inventories of item A that are not ordinarily interchangeable, and the goods and services produced and segregated for specific projects shall be assigned by a specific identification of their individual cost. So specific identification of cost means specific costs that are attributable to the identified items of inventory. Where there are a large number of items of inventory which are ordinarily interchangeable, specific identification of cost shall not be made. So, there are many inventories which are ordinarily interchangeable. So for example, I know many clients of mine who sells certain products, especially in the retail kind of a sector, who sells their product as an individual product, as well as they group it and they sell it. So what happens is, in those specific cases, that when you sell it as an individual product, their net realizable value is different. When I combine 3-4 products and sell it as a set, then there is a different valuation for that set. Correct. So I can't take up the as an interchangeably, whether it's a part of individual cell or whether it is a part of the set as such. So how will I consider the cost of the same? So that are not ordinarily interchangeable. So when I am doing a set of those products, then they are not ordinarily interchangeable. So they should be considered separately only. So I can't say that I have inventory of A, B, C products. If I have to combine three of them, their valuation or NRV comes down. Correct. So that's not the correct way of valuing the inventory, because they are not ordinarily interchangeable or interexchangeable or combined as a set, etc. So this is how the cost of that specific inventories is to be calculated, and the goods or services produced and segregated for a specific project shall be assigned by the specific identification of their individual cost, right? So specific identification of cost means specific costs that are attributable to the identified items of inventory. So especially in case of construction, etc., wherein the specific goods are given to a specific project. So a cement which is given to a specific project, or some other items of construction which are given to a specific project. So there can be differentiation between their valuation. So this is what is the cost is to be calculated into those various cases. There is something, which we also follow very clearly, that whether you follow first in, because that's valuation of raw material is important while I'm calculating WIP or while I'm calculating the finished goods as such, valuation of finished goods. So it talks about first in, first out and weighted average formula. So it is expected that the cost of inventories other than the inventories appearing in the previous slide shall be assigned by using the first in, first out or the weighted average cost formula. So it is expected that, okay, I'll read that. The FIFO formula assumes that the items of inventory which were purchased or produced first are consumed or sold first, and consequently the items remaining in the inventory at the end of the period are those most recently purchased or produced. Under the weighted average cost formula, the cost of each item determined from the weighted average of the cost of similar items at the beginning of the period and the cost of the similar item purchased or produced during the period, the average shall be calculated on periodic basis, or as such additional shipment is received depending upon the circumstances. Correct. Okay, so the point which I want to make here is this is the part of ICDS 2. So what is expected by the business entity if I am following first in, first out method? I should continue to follow the first in, first out method unless it is specified by law, or unless it is specified by someone for some or other reason, or it has been declared that for better presentation of the accounting results, we want to change the method from first in, first out to a weighted average, or maybe weighted average to first in, first out. There is no last in, first out method. Is the LIFO is not just considered over here, which is not considered anywhere also, but still not considered here. So first in, first out and the weighted average cost formula, these are something which is important to be followed as a principle. And if there is any change in the principle, that needs to be mandated by law, or that needs to be supported by some kind of a resolution or something of that sort. There are certain case laws also to that extent, that also, if possible, time permits, I'll cover. So what it means to say is follow the same method, or if there is a change in the law, or if it is required by the better presentation, or for some other reason which is valid reason, then only change the method. Otherwise, you don't change the method. So that's the meaning of this first in, first out and weighted average cost, right? Of course, legal, technically speaking, what is FIFO and weighted average, we all know, but still, what is the meaning? What's the relevance of it is being there? Correct. So next is standard cost, takes into account the normal levels of consumption of materials and specified labor efficiency, capacity utilization. They are regularly reviewed and if necessary revised in the light of the current conditions. So there are n number of multinational companies which we know, wherein we work, or which we work. They follow a very standard way of calculating their raw material cost. Especially we call it as a standard cost. In case of production, there are specific bills of materials. They know what is their standard cost. They put up that standard cost and the standard consumption into their bills of material. They calculate what is the cost of finished goods or WIP on the basis of standard cost. So what is expected here is by the company is to have the if they are following the standard cost method, then they should take into account the normal levels of consumption of material and supplies, labor efficiency and capacity utilization, and they are regularly reviewed. That is important. They are regularly reviewed and if necessary revised in the light of current conditions. So if you are following this while calculating or the measurement of the cost, you can take standard cost of the that product. So you can say that my standard cost of the product comes out to be say 112 rupees. So I will take my valuation of inventory as 112 rupees. Why? Because I believe in my standard cost, there are less variations, there are less variances. And I have taken into account all the things which has been mentioned in this ICDs 2 about the standard cost. So that's 112 rupees per kg per unit or whatever it is as a standard cost as per my system calculates. It is there and I'm ready to take that as a standard cost. So no problems. Correct. So it is accepted by the ICDs 2 also, provided that you follow all these conditions which are there. Correct. So that's a standard cost. Next is the retail method, which is used in the retail trade of measuring inventories of large number of rapidly changing items. So especially FMCG kind of industry that have similar margins and for which it is impracticable to use other costing methods. The cost of inventory is determined by reducing from the sales value of the inventory the appropriate percentage of gross margin. So they have given that. Of course, it is all for NRV. It is not for the cost. Again, we have to remember that ICDs is not just speaking about the cost price or the costing of the this one, but it talks about the NRV also because we have to find out which is lower. So in case of very FMCG, very large amount of FMCG goods as such, wherein very difficult to find out what is their NRV. So in the case of that, what is being given is the cost of inventory is determined by reducing the from the sales value of inventory, the appropriate percentage of gross margin, the percentage used to take into consideration inventory which has been marked down to below its original selling price. The average percentage for each retail department is to be used, right? So this is how we calculated NRV for the retail method also, correct? Right. Then next is, of course, NRV. This is all discussion is on the NRV basis because we have to calculate what is cost and what is NRV also, and whichever is lower, we have to say that this is the valuation of inventory. Correct. So inventory shall be written down to a NRV on an item by item basis. So it is not just generally you say NRV, it is item by item basis, where the item of inventory relating to the same product line, same purpose or end uses and are produced and marketed in the same geographical area and cannot be practically evaluated separately from the other items in that product line, such inventory shall be grouped together and written down in net realizable value on an aggregate basis. Correct. So many conditions, especially in case of FMCG, if it is very difficult to find it out, variation of, what I will tell you, variation. If you go through any of the products which are there, so this product, I have this Fevistick in front of me, right? So this Fevistick and this Fevistick. So maybe there is a small difference between these two. So you don't know how will you calculate the, between these two difference as such. Maybe they're very difficult to find it out. It's NRV. So what is it is been stated? That is the same product line, same purpose, same end use, produced and marketed in same geographical area and cannot be practically evaluated separately. So I can't calculate what is NRV of this Fevistick and what is the NRV of this Fevistick. Then possibly maybe 10 gram difference, or maybe what's their unit of measurement, I don't know, maybe 10 grams or something like that. So I will combine them all together and we'll say that this is what is the, I mean to say their NRV which is there, because it's very difficult. However, it has to pass all these conditions. Then only I'll calculate NRV on that basis, because ultimately cost or NRV, whichever is lower, I need to identify while doing that inventory valuation under section 142(2), right? So we have to remember those things basically from where we started. The estimates of the NRV shall take into consideration the purpose for which the inventory is held. The estimate shall take into consideration fluctuations of price or cost directly relating to the events occurring after the end of the previous year, to the extent that such events confirms the condition existing on the last day of the previous year. So NRV can go up and down. I know many of the FMCG or pharma companies, they recall their products because for 4 months or 3 months to expiry, they recall their products, they destroy their products. That might be as a part of their inventory because they have recalled it technically from their dealers as such. So what to do in those cases, how to calculate NRV, because their expiry date is nearing very fast. So then their NRV comes down much below, because they won't see any light of the day of the sale. So that needs to be destroyed. So in those cases, what is their NRV? Of course, so those, while considering those NRV, there are events which are occurring after the previous year, to the extent that such events confirm the conditions existing on the last day of the previous year, correct? So on the last day of the previous year, I'm still having expiry 8 months away, maybe or 3 months away or something of that sort. So I have to destroy those products during the year, etc. So those things also to be considered while calculating the NRV, because ultimately that is what is the cost of inventory. I need to identify cost or NRV, whichever is lower. So this is what is been done. So materials and other supplies held for the use in the production of inventories shall not be written down below the cost, where the finished products in which they shall be incorporated are expected to be sold at or above the cost, correct? So material and other supplies held for use in the production of inventory shall not be written down, correct? So I am holding those products for the use of production or inventories, but that shall not be written down below the cost, where the finished products in which they shall be incorporated are expected to be sold at or above the cost. So if I am going to use those materials in the final products, and those final products are being sold at above those material costs, then of course it cannot be written down. So there are many cases. I tell this case quite a few number of times, that milk and the plastic cover which we used to put the milk, so half a liter or full liter, etc. So what is the value of that polythene which we use it, because that polythene comes in a big numbers, etc., etc. And unless you put up a milk in that, what is the value of that polythene? That value of polythene is nothing. So I say at end of the 31st of March, the value of that polythene is 0, because ultimately it has no value unless I put up a milk into it, correct? So because it's a packing process. So if I procured that polythene in thousands of crores of rupees, and then I said that it is to be written down because it cannot be used in future, etc., or whatever is the reason. So the value of that polythene is not there unless I put a milk inside it and sell it as a half liter, 1 liter bag as such. So in that specific case as such, what is the value of that polythene? Because ultimately when final product I am selling, it is going to fetch the value. So I just can't write down the value of that polythene, because it is of no use unless I put the milk to it. So that cannot be done. That is not accepted. The value of that raw material has to be calculated. It can't come to the 0. That is what is the idea of this point is. So where there has been a decline in the price of materials, and it is estimated that the cost of finished products will exceed the NRV, the value of material shall be written down to the net realizable value, which shall be replacement of cost of such material. So if there is a decline in the price of material, that's a different, especially in case of fashion or FMCG industries as such, whereas there can be a decline in the price of the materials. And then what to do in that case? It is estimated that the cost of finished products will exceed the NRV. The value of material shall be written down to a value of the net realizable value, which shall be the replacement of cost of such materials, correct? So what is the value of opening inventory? We have seen that, okay, so we'll go through one by one. So value of inventory as on the beginning of the previous year shall be the cost of inventory available, if any, on the first day, on the day of the commencement of the business, when the business has commenced during the previous year. So of course, opening is not just 1st of April, because if my business has commenced on 1st of July, then what is the value of inventory on 1st of April is 0, of course. So that's not correct. The cost of inventory available, if any, on the day of commencement of the business, when the business has commenced during the previous year. So on 1st of July, if I'm bringing some inventory to the business, then of course the value of that inventory is the value of opening inventory. That's a logical one. The value of inventory as on the close of immediately preceding previous year in any other case. So what is the value of opening inventory? Is the value of inventory as on the close of immediately preceding previous year in any other case. Then as what I have been stating earlier also, there are two methods which has been given: first in, first out, and weighted average. So change in the method of valuation of inventory. The method of valuation of inventories, once adopted by a person in any previous year, shall not be changed without a reasonable cause. So what are those reasonable causes? You go to cost accounting standard, we change methodologies or we change the way we for the presentation, etc. So what are those reasonable causes has also been given in the cost accounting standard. So those 3-4 reasons which you can always say that's the reasonable cause to change the methodology or to change the method of valuation of inventory. So first in, first out, and weighted average, etc. Next is, of course, disclosure. The following aspects shall be disclosed, namely the accounting policies adopted in measuring inventories, including the cost formula used, where standard costing has been used as a measurement of the cost details of such inventories and the confirmation of the fact that the standard cost approximates the total cost. So that needs to be displayed somewhere. This needs to be given as a disclosure. Then the total carrying amount of inventories and its classification appropriate to a person. So what are the carrying amount of inventories and its classification that needs to be given as well. So in detail, inventories has to be given. Then I have given some illustration for your understanding. You can just take 1 minute to understand, to know what is the value of inventory. So I give you a 1 minute's time. I don't know whether we are having any interactive sessions. Let's talk. I'll share it in a small format. Correct. So if you can go through this, so material cost is 100, labor cost is 20, direct variable production overheads are 10. So and fixed over production charges for the year on the normal capacity of 1 lakh kgs is rupees 10 lakhs. 2000 kgs of finished goods are on the stock at the year end. Please value the inventory. So how will you value the inventory? If any guesses, I'll give you 1 minute's time. Yes. Correct. So if you go through its valuation, 100 rupees plus 20 rupees plus 10 rupees. So 120, 130. Now the question comes, what we should do of the fixed production overheads? So the fixed production overheads for the year on the normal capacity 1 lakh kgs is rupees 10 lakh. So if I have to calculate per kg, it comes out to be 10 rupees. Now the question is whether I should charge that 10 rupees or whether I should not charge that 10 rupees. So nothing has been mentioned here that whether capacity or above the capacity, etc. So I already have 2000 kgs in the finished good stock. Of course, it has nothing to do with capacity, but still, since it has been given as a normal capacity of 1 lakh kgs is 10 lakh, so that amounts to 10 rupees. So my fixed overheads portion also comes out to be 10 rupees. So 100 plus 20 plus 10 plus 10. So 100 plus 20, 120 plus 10, 130 plus 10 is 140. So how will I value the inventory? So how much will be the value of inventory? My value of inventory will be, of course, 140 rupees. So that should be the value of inventory. So next one is, can G Limited, a wire company, while net valuing its finished goods at the year end, include the interest on bank overdraft as an element of cost for a reason that overdraft has been taken specifically for the purposes of the financing current assets like inventory and for meeting the day-to-day working expenses. So just understand that whether it can be given as such. So what will be your answer? Correct. So here it is. I'll also show you the answer. Of course, I have my own doubts about this answer, but still. So what it said, the cost of inventories comprises of all the cost of purchases, cost of comparison, and other costs, including bringing the inventories to their present location and condition. Interest and borrowing costs are usually considered as overheads that don't contribute to the bringing the inventories to their present location and condition. Therefore, the proposal of G Limited to include the interest on bank overdraft as an element of the cost is not tenable. Interest of the bank overdraft will not form the part of cost of production. So the important point here is these overheads, that is bank overdraft, don't contribute to bringing the inventories to their present location and condition. Correct. So what is important is it doesn't it doesn't have any role to bring these inventories to the present condition. So that is why the bank overdraft cannot be considered as a part of the inventory valuation. Correct. I hope it is clear. Then next is this. The company deals in 3 products. Yes, Padmanabhan.
But that screen is a little bit very smaller. In fact, that PowerPoint is not. Now it is okay.
Correct. So now company deals with 3 products, X, Y, and Z, which are neither similar nor interchangeable. This is very critical, which are neither similar nor interchangeable. At the time of closing of accounts of 2019, the historical cost and NRV of the item of the closing stock is as follows. So value this inventory. So what will be the value of A? What will be the value of B? And what will be the value of C? Correct. So quite simple. Take about 1 minute's time and apply your mind to find out the answer. Correct. So as we all know, NRV, that is net realizable value, or the cost, whichever is lower. So I mean, what they have given category, neither similar nor interchangeable. So you can't say that ABC are same. So it is very different to each other. So for A, the value will be 28 because it is ultimately the NRV which is lower. For B, it is indifferent whether it is cost or NRV, that is 32. So that's the final, that's the lowest number. And then, of course, in case of C, their NRV is 24 and historical cost is 16. So whichever is lower is the 16. So that amounts to 16 historical cost, right? Next is. Correct. So just go through this next one. Yeah. Correct. So this specifically question is for 2019 because from 2019 onwards, the application of ICDs has begun. So the case is very simple that company is paying some extra amount for taking delayed delivery of the cotton from the suppliers godown. So up to 17-18, the company regularly included such charges in the valuation of closing stock. And this being in the nature of interest, the company has decided to exclude it from the closing stock valuation for the year 18-19. That would result in decrease in the profit of 7.6 lakhs. So how will you deal with the following in the annual accounts of the company for the year 2019? Correct. So answer is quite simple, that since ICDs has started from that specific year. So it says that the para 29 of the AS5 was the net profit or the loss for the period, prior period items and the changes in accounting policies, that states that the changes in accounting policies should be made only if it is required by the statute or for the compliance with the accounting standard, or if it is considered that change would result in the more appropriate presentation of the financial statements in the enterprise. Therefore, the change in the method of stock valuation is justified. Correct? Justified. Why? Because they are going to follow the ICDs from 18-19 onward. So in that specific case, this would be acceptable because ultimately, it is very much justified in that case to find it out that it is very much justified because it is ultimately there is a change in the law. ICDs has come into the picture. And of course, when it is disclosed or for the better presentation, if it is to be done or a correct position is to be achieved, that is why it is justified and it is accepted. of the reduction of 7.6 lakhs rupees, right? So we'll go to the next, correct? So, when we are saying that there is 145, 142 2A, we have ICDs. Now, what is important next is to have the valuation report. So what is expected in that valuation report? Again, these are certain suggestions. This is not finalized. Again, I'm telling you that it is expected that before 15th of August, I'm expecting some rules or some format or something will come up. Not necessarily that it will come on 15th of August. That's my expectation. It might come 2 months. 10 months down the line, I do not know, but there is some work which is going on at DIT because they also have to come up. They are most efficient people. They might be waiting. They are also busy up to 31st of July, we all know. So they might come up after 31st of July. There must be some think tank, some process which is going on at their end. Institute has submitted their suggestions, and what Institute has submitted and whatever is my general knowledge on that basis, I'm trying to give you that this should be the draft format. This is not the final format. This is in generally what cost audit report and their annexures. And so it is in the source similar lines we have prepared, or I'm suggesting this kind of a draft format. So this is just to go through those slides. These are not exactly as such what is been expected or given over there. So of course, this is our suggestion. This is my suggestion as a draft format. So what should be there is the valuation of finished stock, work in progress, raw material, byproduct, intermediate, other stores. So what is the method, reasons for variation in this case, effect on the profit due to such variation. Then we have information about assessees, audited accounts, documentary checklist. Of course, it's a inventory valuation checklist. So this is what is the checklist which has been given. So you can just go through this checklist. I think this PPT, I'll share it with the chapter. So whoever has attended today's session, you can mail this PPT so they can have the checklist. Or if you are watching this on the, of course, on the online, you can just take one photograph of this checklist. You can keep it to yourself. There will be some addition, deletion. This is just a draft suggestion. I'm not saying that this is sacrosanct or final as such. So you can just take one photograph of this inventory valuation checklist. Okay, so what are the points which one needs to check? I think these are self-explanatory. We all are practicing cost accountant, so we all know. So details about inventory system, design of ERP, any changes in inventory valuation method, frequency of inventory valuation, brief about recording of sales return. Is there any provision of non-moving, slow-moving, absolute stock, etc.? If yes, the about provisioning policy of the organization, any inventory lost due to theft, fire, treatment of inventory sent to the approval basis as a free samples, correct? Brief. So these are the specific points which one should look for. This is again not a good exhaustive list. This is just a suggestive list. You can have 10 more, 20 more points over and above this, but it should be a good beginning to start with what should be the checklist. So the first one was documents to be seen, and the second one was the things to be need to be checked as applicable, right? So this is what is all about inventory valuation under the Income Tax Act. I've tried to cover, give justice to my presentation. So hope you have liked it. So thank you so much for your patient listening. Back to you, Papan bhai. If you have any questions, you can ask. You can put it over here. You can ask, or you can put up the on the chat or something like that.
Yes, Ashish bhai. In fact, I should thank you for the efforts taken by you when you were chairman, Direct Taxation Committee. I forgot that actually. That the way you followed up with the Minister of State for Finance, and finally we got it. And I was also very happy because many people have taken the portfolio as chairman, Direct Taxation Committee, but could not get what we have got today. In fact, this is very serious, I should tell you. As you have also heard in the committee where I was also invited, that it is not that practicing cost accountants have got a chance, but the responsibility and accountability is very, very crucial and very important. That way I am very happy, and I am telling you, dear participants, and of course this will be uploaded for those who could not attend also can listen to the deliberations made by Ashish bhai. But with such sincere efforts, when this can happen, definitely our institute, the thing also will come under IT Act. I am very confident about Ashish bhai's sincere effort. Of course, I am handing it over to Hima. Hima madam, I should tell, because she is today my chair. I am ordinary member of Trivandrum chapter, so she is my leader. So I should tell. Shireen also.
Thank you, Bhai. Thank you.
Yes, they are all our leaders, and I hand it over to them. But one thing is very clear: unless otherwise, we take some effort, and that the thing. 1 second, Ashish bhai. 1 second. Suresh bhai, I am attending Ashish bhai's webinar by Trivandrum chapter. I will call you. I will call you. Another council member, Suresh bhai, is telling that he would like to join this. I told next time we will see. I told right now, Hima, please note. Another council member from South, Suresh Gunjali sir, is also watching this. People are very happy. They are all silent, the thing, but we need some people, some leaders who can meet the ministers with their influence. Of course, here some crackers is going on, some sound is coming. I still remember when cost accounting standards were going on, Hima, kitten and cat used to come for Ashish bhai's
behind me office because we have some kittens, cat.
Because I am a keen watcher.
I'm at home today.
So, of course, I have also learned something. I was attending throughout the webinar of Ashish bhai, and I think this is only a beginning, Ashish bhai. This only more such programs are required, where our that too, especially youngsters who are coming to that practicing arena, they need a lot of. Only thing they are asking is institute should. Today, in fact, tomorrow is the last date for ITR. Okay.
Correct.
Some of our friends have written in the WhatsApp group that what is the institute doing? Tomorrow is the last date. Correct. Some people have written that it is hanging. People are telling not hanging. You please do it in such a manner. So anything and everything, people can blame the council members, but being an elected representative for more than 3 decades, I know it is easy to tell others, but what we should follow is also very important. And thank you so much, Ashish bhai, for coming to our mother chapter program, and Hima, my Esther years student darling, today the daughter of the profession. He is a managing committee member. I am very proud. Shireen is also there, Kozhikode Malappuram chapter chairperson. Thank you very much, Ashish bhai. I have learned something today from your deliberation. Not everything. I am a person. I don't claim that I learn everything, but something I learn. Because during our school days or college days, teachers expect us to listen to them 100%. 100% is very difficult. So more such programs are required, and when update comes, I request Ashish Bhai to please be in touch with Hima, so that more such programs can be done. And thank you, Hima. Over to you, Hima, madam. I am calling you Hima, madam, because today I am a member of you. I am not a council member. I am a member of Trivandrum chapter. She is my leader. Over to you, Hima.
Thank you, sir. Thank you so much, sir. Sir, we have a question here from Bala, sir, to explain about cotton clearance.
About the
cotton clearance.
Cotton clearance. One second, that was that specific question. Cotton clearance.
Yeah, please once again explain about cotton clearance.
What is cotton clearance? I'm getting.
What is clearance?
What is cotton clearance?
No idea. And when another question
this
is
illustration number 4, O Limited has to pay delayed cotton clearing charges over and above the negotiated price for taking delayed delivery of the cotton from the supplier's godown. Up to 1718, the company regularly included such charges in the valuation of closing stock. This being the nature of the interest, the company has decided to exclude it from the closing stock valuation for the year 1819. This would result in the decrease in the profit by 7.6 lakhs. Now, question is, how would you deal with the following in the annual accounts of the company for the year ended 31st March 2019? So, as I have stated earlier also that since they are getting into a right position, what they were doing until yesterday is not important. They are getting into a right position by following the ICDs, which does not include the borrowing charges or the finance charges, because it is not being paid for the purposes of bringing inventory to the current location or current position as such. So that is why it is to be excluded. Should have been excluded right from the beginning, but now they are following the same, so they are right. So you should also exclude, I mean, while doing the audit, you should approve that they have excluded this 7.6 lakh rupees, which is a kind of a delayed delivery charges which has been paid. That's not going to form the part of the inventory valuation. And of course, it's a delayed delivery charges. So any which ways, this will not form the part of the inventory charges as such, because in our costing bucket 1, bucket 2, bucket 3, it doesn't fall under bucket 1, but it technically fall under bucket 3. So here in this case of ICDs or in the income tax department net, it will fall under bucket 2, because they don't have bucket 3 as such. So it will not fall under bucket 1, but it will fall under bucket 2 as such, right? So that's the answer. Hope that whoever has got the question has been satisfied.
One more question is there.
Hima? Yeah. Another question is, do we apply any inventory model through the technology?
Do we apply any inventory models to the technology?
Yeah.
If you see the definition of inventory, the technology doesn't include as a part of inventory, isn't it? So I mean, that's the question, I understand.
I think so. Maybe some whether through any technology we can implement any inventory model. I believe so, something like that.
We have the standard costing which has been stated, no? So that is the technology which we apply for the inventory valuation. So what is the exact question? Can somebody post here? I'm not able to see the question.
So can you see now? I just published it now.
No, it just that sentence only. What
so it is in Q&A sections. Do we apply any inventory model?
Q&A section. Just hold on.
Yeah.
Q&A section. Something is coming up. Okay. Fixed overheads to be taken up only for the units produced. Please once again explain about cotton clearance.
So I think this question came around 7:45.
Yes. So do we apply any inventory model through technology? Oh, this is what. Oh, now I got it. Okay, because once you read it, once you listen it, it's different. Once you read it, it's different. Correct. So do we apply any inventory model through technology? Inventory model through technology. Thankfully, there is no inventory model for technology. Otherwise, I don't exist. Correct. So, I mean, AI can come up tomorrow and can have inventory model through technology. I do not know. But standard costing, which I have told you that companies, larger multinational companies, they believe in standard costing. That's the only technology which, according to me, we can apply for the inventory model. Because once I say that this is my standard cost, this has come through various processes like what it has been mentioned in ICDs asset. So regularly updating and writing off and this, that, so many things which there it has been mentioned in the standard cost. So I can say that this is the standard cost of my material, standard cost of my WIP, standard cost of my fixed FG. Finished goods. So having said this, this is the technology wherein we can apply a very famous ERP like SAP. I know those who constantly follow standard cost. They are the pioneers or the big people, those who do standard costing on that basis. So that's the technology which I will say use it for the inventory valuation. Other than that, nitty-gritties and small things or big things, whether this to be included, not to be included, this that needs to be developed somewhere. And I don't know whether technology will permit you to develop so, but human intervention may be required to do so. I do not know. And of course, this audit is of the human intervention only. That is, auditor has to come in and decide and see how much is the inventory valuation asset. So for that purposes, technology looks to be very difficult to be applied, but only to that standard cost. Once it is there, I can just go through the SAP backend or whatever output which is there, and I can see what was the standard cost on 31st of March, apply the same and close it. Correct? Yes.
I believe that's all.
So, okay. Thank you so much once again.
Thank you, sir. Sir, can we wind up, sir?
Yes, yes.
So thank you for providing me, because it's actually my first time to host a section. So it has been a wonderful experience for me as well. Thank you so much. Thank you so much to the chapter, our chapter, Kozhikode and Malabar chapter. Thank you so much for providing me such a wonderful opportunity to host this section. And to be in converse with you, sir. I believe I'm meeting you for the first time. Papan sir, we all know, but sir, I haven't. So we had an informative section. I hope for the participants as well. So thank you one and all. So I believe Sherin, thank you so much for the welcoming speech, and thank you for the informative section.
In fact, Hima,
Yeah, sir.
Sherin Shamli, another woman representative of Kozhikode Malappuram chapter, she is there. Mail Murugan sir is there. Prakash Chandra. So many other exterior leaders and current leaders. Many people are watching this. I am very happy. And I never felt Hima is doing for the first time. Really excelled. So you and Ashish Bhai have to do more programs. Sherin also. Of course, like Ashish sir told, new president, new team, what committee, let us wait and see. So that Neeraj Bhai, Ashish Bhai and other practicing cost accountants will, because majority of the members, practicing cost accountants are in need of some or the other webinar, where they are telling that we could learn. Otherwise, simply asking question in social media has become a fashion to ask question so that they come to the limelight. But solution nobody is giving. Ashish Bhai is giving solution. That is very important for the thing. And Hima, it was not like first time. We felt like you have done so many programs like that. I am telling you honestly, because I have watched Sherin. I am very happy for you also. That Sherin was the one person, Ashish Bhai, who was telling, we met Ashish sir in Global Summit. And
Correct.
such a nice person that he smiled and wished us, but we could not mingle much, but he respected us from chapter, because Sherin madam, he is also chapter man. He was a regional council chairman. Okay, now only council member. So he knows the feelings of chapters, study circle, recognized work coaching center, support center, everything. Sherin was very happy that Ashish Thatte sir wished us and spoke to us. That way everybody are very happy, Ashish Bhai. And Papan Bhai is nothing but Ashish Bhai is nothing but Papan Bhai. So who is going to propose vote of thanks from Dil Se? Dil Se thanks kaun bolega? Hima or Shireen? Over to you.
Yeah, I will carry on, sir.
Please, Hima. Very good. All the best.
Thank you, sir. Thank you, Ashish, sir, from the bottom of the heart for such an informative section. And thank you, Shireen, for the welcoming speech, to honor the welcoming speech. And thank you, Papan, sir. You're always a great support for us. You're always there for us whenever we need you. And so on behalf of Trivandrum chapter, Kozhikode and Malabar chapter, I officially honor the Malappuram chapter. Sorry, Malappuram chapter. I officially wind the section. Thank you, one and all. Thank you for the participants. I hope this was a wonderful section, and yeah, I believe it was a successful section as well.
Yes.
Thank you, sir.
Thank you, Ashish Bhai,
so much.
Hima,
Thank you.
Shireen, happy
Yeah,
friendship
hope
day.
to meet you soon for
Yeah.
the other sections as well. Yeah, thank you, sir.
Yes. Thank you.
Thank you. Welcome.